Good afternoon or good evening if you're joining us from Europe. My name is Peter Atkinson. I'm the VP of Sales at ebankIT, and I have the honor of hosting this next session, Digital Banking Trends for the Next 5 Years. I'm joined by 3 industry experts, Yana Melnichuk, VP of Digital Banking at Coast Capital, one of the largest credit unions in Canada. Richard Pearce. Richard is the founder of ResponsibleRisk, driving improvements in sustainable finance adoption. I'm going to ask Richard to explain a lot more of the detail of that shortly. And Vitor Barros. Vitor is Head of Innovation at ebankIT. Now I would like each of our panelists to just introduce themselves and their organizations. So, Yana.
Hello, everyone. Pete, nice to see everyone. I oversee, as Pete mentioned, digital banking at Coast Capital. Coast Capital Savings is one of the larger credit unions here in Canada, where we provide full service banking. And my portfolio in particular, we look after the digital banking experiences, online, mobile banking, as well as all the acquisition membership applications associated with that. So very, very busy portfolio, as you can imagine, over the last couple of years. Excited to tell you more about it.
Okay, thank you. Richard.
Yes, hello. Richard Pearce. I'm founder of ResponsibleRisk, which is a consultancy involved in sustainable finance, and we'll talk about what that is later on. But I was at Microsoft for 23 years. There I was in the worldwide financial services strategy team responsible for core banking, open banking, and fintech. I'm also a contributing editor at FinTECHTalents on sustainable finance.
Thank you, Rich. And Vitor.
Hello all. So Vitor Barros on this side. I currently hold the position of Head of Innovation at ebankIT. So to provide some context, ebankIT, we are a company that focuses on creating a digital banking platform that sits on top of any core banking system and can be deployed on typically very short time frames. This platform handles business logic, direct customer channels, the mobile, the web, and whatever comes next. We're going to talk about that today. And indirect channels via contact center branch. It's kind of a bank in a box that can be plugged into any core. So all that while keeping, and this is the part that is relevant also to my side, a constant innovation and evolution stream, okay? To which obviously I will be more than happy to talk about today. Back to you, Pete.
Okay, thank you, Vitor. So it can be argued that the banking has remained largely unchanged for much of the last 2,000 years. I think the advent of digital banking, certainly in the last 20 years or so, has helped to enable change. But I would also argue that it's actually been driven by a bunch of other factors. So things like regulation, or more accurately, deregulation. New entrants into the market, so challenger banks, fintechs that are doing some real laser-focused stuff around financial services. Obviously, technology advancements, and we're going to talk about some of those in this session, but also cultural and environmental impacts as well. So most recently, the global pandemic. I'm sure we've all seen the fake viral questionnaire. It went along the lines of who drives your company's digital transformation agenda. So it was A, CEO, B, CIO, C, CTO, or D, COVID-19. Now, if you look at the answers that were put, most of the polls actually figured out it was COVID-19. Now, whilst I really hope that isn't the case, I think there are some examples where the impact of the last 6 months will have some lasting changes in all our industries. So I'd just like to quickly give you a couple of examples. So the first one is video telephony. So what we're doing right now. So up until, if we think about up until the beginning of this year, it was used extensively by businesses, normally for internal or project work. And it was used personally, so we all used it on our mobile phones, mobile devices. But I think now, largely thanks to coronavirus, it's now seen as a totally viable alternative to face-to-face in many aspects of business. So that's business to business, business to communication, I mean, education, medical diagnosis, financial services, home connectivity, all of these are now using video conferencing, video telephony as just a de facto standard. And I think that will also, I don't think that will change. I don't think we'll revert back to face-to-face permanently for everything. I think another trend we're seeing really in the whole sort of post-COVID world is around contactless and mobile wallet payments. So the uptake pre-COVID was pretty steady, but then it took a real spike when COVID hit. And I think rightly or wrongly, people are seeing cash, certainly physical cash, as largely unnecessary in some cases, and actually in some cases dangerous. So I think these are a couple of changes that will impact us, and certainly going forward, we're going to see both of those. But I think we always have to remain aware of the communities that aren't yet equipped to make all these transitions. So in some of the earlier sessions today, we heard about some of the challenges that smaller community banks have, that maybe they don't have the resources to make the necessary changes. So we've got to figure out, well, how do we help them do that as well? But then there are also entire countries that are in danger of being left behind. So Nigeria, for example, has got a population of in excess of 200 million people, but over 40% remain unbanked. Now, maybe the proliferation of low-cost smartphones, lighter, smarter, cloud-based digital banking systems can help to address this. I certainly hope so. Anyway, the purpose of the session today is to explore some of the digital banking trends that we think we're going to see in the next 5 years or so. Now, I'm very conscious this is a broad topic. We can really only scratch the surface in this session. And if you have any questions, please add them to the chat panel at the bottom, and we'll try and address them. But meanwhile, I'd like to kick off asking a question to start with. So Yana, if we consider these last 6 months, which I've just mentioned, have affected many, many lives and businesses, can you just talk about how this has impacted your long-term digital priorities? So is it a major realignment, or are you kind of sticking to your strategy?
So for us at Coast, we've had quite aggressive strategy already to begin. We started our digital transformation a few years back and have been steadily making those investments throughout the last couple of years. And whether that touches the cloud infrastructure, API-enabled architecture. So we've been building that steadily over the years, including launch of our recent digital banking platform with our partners at ebankIT, of course. And building on top of that with a number of third-party fintech partnerships to extend our services beyond the core services that would be available through our offering only. So it's definitely been an ongoing journey, and I have to say that those investments were well placed in light of COVID. We saw our members use digital channel a lot more extensively during COVID, as expected, of course, with many of our branch closures. And so we definitely saw a spike in digital users through COVID. We saw double-digit growth in logins as well as transactional activity. And so that reaffirmed our direction of where we're going, where we need to go. So our go-forward strategy and priorities is actually to double down on digital. And that comes from top down, with our CEO being one of the most vocal fans of the work that we need to be doing here. And so with a greater enterprise support, we plan to continue to invest in new modern technologies, look to continue to evolve our backend stack to enable all of these innovations, and then of course look at the front end experience. What are some of the additional services that we need to be offering to our members going forward? So definitely a big focus moving beyond transactional capabilities into fulfillment, which we already do, but continuing to grow that, maturing that, and then leveraging those new innovations, whether it's in the AI space, in the open banking, to continue to extend our ecosystems and grow the sophistication of the type of services that we have running in the back end and on the front end.
Okay, thank you, Yana. And Richard, can I turn to you? In your experience, how have you seen financial institutions coping with this new reality?
Yeah, I think you've touched on a really good example, which I'll build on. But I think, when I was at Microsoft, we all started, post 2008, this conversation about digital transformation, fourth industrial revolution, and we've got a long, long way to get to where Yana is talking today. But I think really what we would have found is that, everything from our early adopters to our laggards, there would still have been a lot of people saying, well, we can't go quite that far yet. We can't have our employees working from home. We can't have video conferencing over the internet. We'll only let them do that from the branch. There would have been all sorts of risk and control factors which would have limited a lot of the progress. So what we've seen is since 2008, billions of dollars spent in consulting, discussion, discussions with regulation and committees and so on and so forth, and very slow progress. But those that were getting ready, and I think quite a few, we'd gone beyond innovator to certainly to early adopter and early majority, were getting ready. Then they were able to roll it out, in the crisis that we just received. Those that were in the laggard space, must have really struggled, during this last phase. Now that really is just to a large extent, the four pillars. You have the customer layer, you have the employee layer, then you have your product layer, and then your fundamental core mission critical systems for operations. I think that the first two layers people were ready for, and that was great for this crisis. But I think a lot of people are still struggling with their product layer to actually have that agile and able to change to the open banking world. I think there's prep going on there. But certainly if you go right to the back end, the core banking systems are still pretty much, I think, creaking away in the old model. And even the challenger banks that came out in the sort of flush over the last 6 years, right up until the last few of them, we're still building off of what I call new legacy, i.e. just wrapping presentation layer around old legacy. So I think the banks and everybody will look at this and go, whoa, we've proven we can do it. It's not an issue. Let's just get on with it now. No more excuses.
Thank you, Richard. So just picking up on a point you made and actually Yana made as well. So you both mentioned open banking. Now, we know it's already a reality in many regions in the world and banks implementing it. And in fact, this morning there was a really good main stage session just on open banking, which I called earlier on, which is really good. I'd like to ask Vitor, with your sort of innovation hat on, how can you talk about how you see open banking evolving beyond its current state?
Okay, so thanks for the question, Pete. It's an interesting question because open banking, essentially, it has appeared to kind of give some agility to financial institutions. So let's start from the beginning. If we consider in Europe what already exists via PSD2, banks have APIs or open banking APIs that allow exposing accounts and enabling transactions, okay, to be consumed by other financial institutions. And the expectation, and this has been also the discussion of the morning, is that sooner or later, most banks worldwide would be equipped to handle these types of external connections. So to your question, how can open banking evolve beyond that? Open banking should not be only about cross-connecting to other financial institutions. It should be about plugging into fintechs and third parties. Banks and credit unions shouldn't work as a standalone institution or exist like an island. They should look forward at building their own ecosystems. Fintechs and third parties are enablers. Flexibility and adaptability should be the end game, and ecosystem kind of the mindset banks should have. So to build this ecosystem-enabled architecture, what would that mean in practical terms? So what should we be looking for on these next years? And what is that translates into? For one, having a platform that is API capable, integration ready, it ensures that whatever we want to connect to, we have the tools, the APIs, the connectors, and we can achieve these fast and easy. And fast and easy should be the key here. Because if software exists, this is actually something that somebody also said on the morning, and I really correlate to that message. If software is ready, so fintechs have this great software, we are effectively, by leveraging open banking to integrate with them, we are reducing the cost, the effort, and the risk. So to wrap this up, if a bank or credit union can promote internally this fail fast, this experimentation mindset and culture, they will accelerate their capability to adapt. And I think that adapting is probably one of the biggest words that will be relevant over these next 5-10 years. Okay, so failing is actually, it has a huge role in success. We learn lessons and we iterate over those lessons. Open banking future in our vision is about undertaking these lessons as fast and with as little investment as possible, so we can iterate, move on, and create something new. Back to you, Pete.
Okay, thank you. In fact, one of the watchers has made a really good point about this, about talking about open banking driving open data standards from any source, and then ultimately enabling financial wellness, which I think is actually wrapped up in part of it. And I'd like to just turn that to Richard. I mean, you mentioned open banking before, but do you have a perspective on this? Is this, do you violently agree or disagree with what Vitor just said?
No, I totally agree with Vitor. I mean, obviously, you know, we remember the background to this, the Competition Market Authority wanting to introduce more competition. It started with PSD2, and it started with, you know, an experience of how do you introduce this ecosystem to get access to that data that Bradley talks about, so that you can actually empower the individual and also the competition in the market to actually bring new innovation and quality of service. So I think that's the journey we've been on, and obviously things like the secure customer authentication processes and you know, all of these regulatory technical standard and so forth, you know, were really important building blocks that had to be washed through to understand how to securely and safely allow for that ecosystem to operate. I think what will accelerate now is we move away from sort of open banking with its focus really on aggregation and payment. We'll move much more into open finance, which is obviously the next wave coming through. So we'll move into wealth, we'll move into commercial banking, and all of those players, you know, a couple of years ago, were starting to look at this and to say, okay, how do we take, you know, the lessons that we're learning from PSD2 in the consumer space and then apply that in commercial and wealth and investment and so forth. So everything Vitor spoke about in terms of the ability to create you know, an agile platform that allows you to accrete the best of the market to you and be responsive to market changes much more rapidly than was ever possible, is now going to ripple through the whole market much more rapidly than the rate to which we have got to where we are today.
Okay, thank you, Richard. I want to move us on because I think there's a lot of ground to cover, but if we're talking about digital banking trends, it's really unavoidable not to talk about well, GAFAM. So what I mean by that, Google, Apple, Facebook, Amazon, and Microsoft, although Microsoft might be questionable, and the impact that these big five can have. Now, Yana, as part of a financial institution, in your opinion, would for example, an Apple bank, would that be a major disruptor or simply just another player in the market? So what is your view on big tech players coming into the banking industry over the next 5 years?
Well, I think it would be naive of us not to consider them as real competitive and real place in the industry. I think the big tech as well as fintechs overall are naturally forcing the competition and the evolution of our industry, putting the pressure on the standard financial institutions such as banks and credit unions to clearly identify and be able to articulate our value proposition to the end consumer and have something to offer to ultimately our members, our customers, in terms of why they would want to continue to bank where they are. So it's definitely an ongoing evolution, and what we're seeing is evolve. However, at the same time, is almost a bit of a natural partnership where banking as a service or even banking as a back-end service to many of these big techs are starting to come out. And so there is this friendly partnership and friendly competition that's on the surface, but I think in behind closed doors there are definitely lots of discussions. How do we continue to position ourselves competitively with the end consumer? And so with big tech, with fintech, they're so strong on the user experience. They optimize those experiences so seamlessly that the barrier to adoption becomes so low. But on the FI side, they often have to offer a full service model where it's beyond a single monoline. It's providing you access to many different things and ultimately also access to human powered advice. And based on what we are seeing, based on our experience, there's still a need for that, especially as you move beyond some of the more simplistic transactions and activities. that value of a holistic relationship management, 360-degree view of that person's information, be able to help them. And I saw a comment in the comment box around financial well-being. That's ultimately where we want to help our end consumers, our members, in terms of how do we bring this together for them and help guide them in their financial journey, and have that be part of our value proposition. So I think the next couple of years are going to be an ongoing push and pull for these cool innovations that are being released all across the industry. And at the end of the day, it's the end consumer who's going to win.
Okay. Thank you, Yana. Well, Richard, as a former insider for one of these, but perhaps you could share your view on one of these big tech players entering this space.
Yeah, I mean, I think it's a super interesting area, and you really need to look at the business models of these organizations in the GAFA side of things. Are they powered by an advertising model, a data model, an e-commerce model, a software model? They've all got, you can actually see what drives their revenue, and that's quite often very revealing. But actually, I would look across to China, not mentioned in GAFAM, but I would look at Ant Financial. I've been tracking those guys for a good long time, and the scale that they're at now is absolutely phenomenal. Obviously, they're getting to the point now where they're having to sort of be Ant Financial is having to separate out of Alibaba. But really, as somebody's just said in the chat window, the super apps where they provide this capability for everything you want to do in your life, essentially, and you can use that to therefore check the credit risk of that person, provide them with a sort of virtual line of credit, and then join that up with all of the other aspects of the value chain. So link it to the merchant, link it to the wealth, link it to the money market, and so forth. They've done this, and they've done it because they've got the distribution, the manufacturing, and the utility all under one roof. They're doing it at scale with cloud and blockchain and distributed apps. And they're doing this in a way that obviously we can't countenance so much in the West because they're a full stack service out of China. But when you move that across to the West and you look at what Amazon is doing, in particular, with the data around the e-commerce model, lots of banks I spoke to have partnered and then actually backed away from that partnering because they found that the lessons were being learned by Amazon, and then Amazon were coming in to actually play that game in their market, be it with a credit card or a domestic market. So I think that, distribution is what a lot of the big banks think they can use the GAFAs for. But actually, that's the thin end of the wedge, and it's hard to compete with them. But I think the banks are going to have to do the old e-commerce .com boom cliche of get big, get niche, or get out. I'll leave it with my old employer, which is their job, they say, is to empower banks and not compete with them. And I think because they went through that antitrust piece in the 1990s, they know this is their game is not to be a bank or a retailer or anything, you name it. So I don't think they're in the GAFAM. I don't think the M should be on there. I'm still loyal to the cause.
Okay, thank you. Well, so Ant Group is certainly one we should. I think we should all be watching here in the West. Then, I'm conscious of time. I want to try and move the conversation on a little bit further. So really, Vitor, from what we've heard, and from again you with your sort of innovation hat on, can you talk about what traditional existing banks, credit unions, regional community banks, what should they be looking out for in the medium to long term?
Okay, good question, Pete. Actually, to be clear, I think my answer will be very aligned with Bradley's comment, because on here, what we should be looking for on the medium long term will be around humanizing. Let me just get before that to some context. So technology so far has proven to be an efficient tool to perform tasks. So performing a transaction, checking our balance, okay, it works, it's perfect. Now, this has been mostly a human disconnected experience, mostly, okay? So what should we be looking for in the medium term? Where are we going? If we consider that devices, networks, 5G is an example of that, are more capable than ever, we should then have the technical conditions to evolve from these, let's call it like these digital cold or mechanical solutions into digital warm fluid solutions. It's a strange way to describe software, I guess. But the idea I'm trying to push here is that technology has the technical capabilities to move from a traditional, it's a cool app, into a more human experience, something that resonates and binds a bit better with the users, okay, than just a cool app. So the message about humanizing customer experience, digital or not, okay, what does that mean? Not to be misunderstood at all. I'm not suggesting that we are returning to handshakes and in-person conversations. They still have their place, and branch visits, they have their place. Instead, what I'm suggesting is that technology is at a stage that allows the typical user experience to be better humanized. And some examples could be initiating a voice, a video call, sharing with the operator what we are doing on the web or on a document and signing that straight on our phone, helping the customer digitally, but with a human touch. Promoting socially balanced solutions where the advice, instead of the advice being given by the account manager, it is given by unbiased peers. And any of these examples I gave just now, they exist today. So eToro, for example, it's a platform that allows investors to invest based on other people's comment. It's unbiased peers to some degree, right? So imagine if we take another step, if we could build a remote in-branch experience. And what I mean by this is something that is fully recorded, auditable, traceable. You could do the document review, signing, something that could be accessed from any place, any device. That would allow all the subtleties and tasks that you perform at the branch just digitally. Why would a bank have 15 or 20 brick and mortar branches when you could have the same capabilities inside everyone's house? And how COVID friendly is this, right? It means people actually can do everything they do when they actually need to go to the branch, they can do from house. Big tech companies, so picking up on what Yana was, what we were talking before, so with GAFA on Richard's version. So big tech companies, they have this huge customer base. Providing humanized experiences will be at best tricky because the reality of the client base they have is very diverse. If we consider a credit union now or a small regional bank, they have a very specific target, a very specific set of clients. Humanizing and correlating should be easier. Banks and credit unions, so on this 5-year, 10-year vision, so what we expect over these next years, we came on a slope that we become very digital efficient, and we should be now going on a slope up that we get still digital, but human. Okay, so we should be looking to create these digital relationship, as Bradley put really well. For example, why aren't banks helping train people find better jobs? Why not, right? Why can't we have this human part on our day-to-day operation? Obviously, a bit of a technocrat here, but obviously artificial intelligence, chatbot, as technology evolves, it will be a shortcut to provide this fluidity that I was talking before, this humanization. But right now, this technology is not there. But I know I'm extending my answer a bit. Do we think
No, we're okay. We're good.
You're good? Okay, so
we're good. Yep.
When we talk today about chatbots, it's just a final example. When we talk about chatbots or voice assistants, most of us have this immediate thought or image of misunderstandings, lack of context, awareness, whatever we want to do that is not incredibly straightforward, like, okay, Google, turn on the lights, is tricky. So if you're like me and you need support and you run into a chatbot on a bank or a mobile network, something, if you need support, the first thing I write is, can I talk to a human, please? But or not, we can still be polite, right? Now, also, this is our today's reality. As we have seen, for example, in the Google I/O event, we had a bot performing a call to a pizza, ordering a pizza, and making an appointment for a haircut. And it was voice, it was perfect. You could not distinguish this from another human, okay? The interaction, the subtleties, the way it would answer, impossible to distinguish from another human. So when I talk here about chatbots and voice assistants to bring this humanization, we are envisioning this next generation of technology as playing a big role on it, okay?
Okay, well, thank you, Vitor. I mean, I guess what I'd like to do is turn that straight to Yana, and then Vitor's been talking about humanizing the digital experience and AI. From a Coast perspective, what is your view on AI, machine learning in the future of banking over the next few years?
Yes, AI will definitely play and continue to play a critical role in how we think about our digital strategy, our technology strategy. So right now we're looking at extending this technology that we already have operating in our backend, say on the fraud management side, very, I would say, effectively, and extending it to other applications such as, say, voice biometrics, where it's not necessarily that two-way interaction, to Vitor's point, but it's really more around, okay, how do we continue and automate some of these transactional type of activities? And then the other thing where we're looking at it very heavily is, of course, around the decision adjudication. So also on the example that Vitor shared, but how many humans do we need to do that type of work, and can we actually again over-index on the advice component as opposed to going through the paperwork and again using AI to help us with some of that adjudication. So that will continue to be the work that we do there. And to be honest, we have actually held off on the work around chatbots, and we've held off integrating that into our member-facing experience at this time, just to give those technologies the opportunity to mature and become a little bit more intelligent. Because to Vitor's point, we know that a lot of those calls right now would be redirecting back into our advice contact center. And then the other application for AI that we're looking at heavily is, of course, around leveraging the data and the insights that come out of that in order to serve our members better. So that's that whole advice-based approach, leveraging the tools and the power that comes with AI to help identify the next best action. And then we're able to deliver that advice, those recommendations, those insights on where maybe we can help you identify subscriptions in your account that you didn't even know that you had, or recommend a savings goal because we're seeing that you're spending a little bit less during COVID times than during a normal time. And then ultimately be able to deliver those insights, those recommendations through both digital channel as well as a human-powered sort of interaction. So that will definitely be a big priority for us going forward.
Okay, thank you. Richard, I don't know if you had anything you wanted to add to the conversation around AI and machine learning. I know Microsoft have a huge investment in this area, and I'm sure you were part of it when you were there.
Yeah. Well, I'd like to take it forward, really, which is that I think that you know, we've only got a few minutes left, and let me talk about sustainable finance. So sustainable finance really is really saying that what we've got to do is bring a lot of this technology and this customer service, but to Brad's point, we've actually got to sort of really empower economies. We've got to empower people to live the lives they want to in a good, safe, sustainable way. Now, the regulators are looking at the banks and saying, look, at the end of the day, climate change, ecosystem collapse, etc., is going to mean that the assets you've got on your books don't actually are going to be, you know, stranded assets. They're not, that coal and gas is not going to come out of the ground. You've got it on your books. It's not going to be worth anything. So you've actually got to look at yourself and you've got to figure out what you've got in your books. Is it green? Is it brown? And then you've got to balance that. Obviously, it's a risk process. And then at the same time, you've got to also start to build products that serve an economy, which is a decarbonization economy. And this isn't sort of a, you know, a happy clappy political point of view. This is rippling through the industry at a rapid pace, with trillions of dollars of capital being allocated to this process at the moment. Now, you come to the question on AI just in this context. The banks sit there and go, my goodness, I have no idea how to classify my assets under the heading of green, right? First of all, what is green and how do I classify it? Because when I was building those books, I didn't even have that in mind. So at Microsoft, what we were doing is we were using particularly natural language processing and machine learning to go through any kind of document, be it physical or digital, and go through that process of huge tagging to identify anything that sort of, hinted that it was green. Now you end up sorting the wheat from the chaff, and you might have somebody saying my car was green, talking about the color paint, but you then have to apply the human beings to that last mile to then turn that into defining whether it is green or not. Now this is just raw number crunching to get to an answer around where do my assets lie. Once they've done this, they're going to have to move on very rapidly to what is my risk position. They've got to start ingesting satellite data to look at deforestation, and the whole industry, in a way, the service level piece is going to be thrown up in the air if we haven't got a sort of an environment in which we can safely operate. So all of these things are going to be, really challenged over the next few years. Sustainable finance is going to be something ESG that we all come to learn a lot more about.
Wow, thank you. And I'm guessing that's valid globally across effectively all types of financial instruments.
Europe has led with it. Today, I've just put a piece on FinExtra where the US has actually gone, we need to actually respond to this. It's got to go through Congress, but the financial services is going through it. As it is, China actually led the way, and Forest again, as part of Ant Financial, gamifying this so that people can actually see their activity turn into actually reforestation. This is a global thing.
Okay, well, thank you. Thank you, Eric. I'm conscious of time. We've got about 9 minutes left. I just want to ask a question around customer experience. There's a lot of discussion, and it's been a hot topic for the last at least sort of 10 years. The CX, the customer experience, and I'd like to ask the panel what they expect to see in that evolution of customer experience over the next 5 years or so. So maybe Vitor, this is one for you to open with.
One of the areas I find more interesting, to be honest. So when we talk about customer experience, we should consider 3 main areas that have impact on the CX: the devices, the context, and for now, let's just call it incorporation, and I will explain what that means in a second. So about devices, technology is progressing on all relevant areas to evolve beyond what we have today is a mobile-centric community or mobile-centric reality. So if we consider we could have next generation voice recognition, voice synthesis, smart glasses that perform as good as the HoloLens, the Microsoft HoloLens, but look like a pair of sunglasses anyone could use. If the battery tech gets small and dense, if we have these image augmenting, right? If we get all these technologies in place, we have enough to move from a mobile-centric reality into something that can be a bit more than that. And that brings to the second point, which is context or context awareness. Just for a second, consider you are standing and looking at a lion, a hungry lion, okay? 10 feet from you. Why do I say context is important? If you are on a savannah, you may be in trouble. But if you are on the zoo, you are probably just having a good time. So context is key to understanding and acting. And if we consider that the devices in our pocket, as great as they are, they have what we tell them, what we give them, and they have positional awareness, GPS, Wi-Fi, right? Consider for a second, 95% of the information we capture as humans is through vision, through our eyes, what we see. If a device has the same capability, so the same context we have, if they can see what we see, there's a lot more that can be explored. Imagine instant credit for a car you are looking at, mortgage calculation based on a customer walk-in visit, buying tickets for the advert you are looking at, okay? To the last point, and this actually also relates to that, which we called incorporation. Traditional digital experiences have been moving from reactive to proactive. The suggestion here, since we are talking about this future vision, is that the next stage of banking after proactive will be about incorporation. That means instead of the reactive, where you open the app, see the balance, close the app, proactive banks, and this is already a new mindset, and it's already a great stage for banks that are working with proactive apps. They suggest, they tailor the solutions, they give you the next best action, they give you reminders. Good. Incorporation can be seen as the evolution over that. So transactions, the act of paying, for example, will become embedded over time on our life. We don't need to think or act about that. It just happens. So this may sound a bit far-fetched, but we have examples today that exist that do exactly that. You know, Amazon Go Store. It's a store where the client walks in, they grab the product, and they walk out. They don't need to make the payment. The payment is done on the background. Of course, the payment exists. Money needs to move. But the act of payment is just an intermediary step to an end. As simplification evolves, the act itself is not relevant, so it will fade into something that just happened. It's incorporated in our life. So it's pretty much in line with my previous answer. Banks and credit unions' value will migrate from the typical capabilities of providing transactional scope mechanism into value-added services, advice, customer support, understanding. It's the whole humanization I was talking before. Back to you, Pete.
Okay, thank you. Well, if I can, just in the last couple of minutes, Yana, so Vitor has just painted this picture of this sort of evolution of customer experience where it's incorporated in what we do. Can you just talk just a little bit about your views on this, about some of the things that you're doing at Coast around CX?
Yeah, absolutely. And maybe just to keep the more narrow focus on this, on the digital side specifically. I mean, we already know that majority of transactions are done online today. There will always be a little bit of a lagger there, but we want to continue to evolve our digital customer experiences to be more wholesome. And so there is this concept and this movement towards turning those digital experiences into more of an engagement experience. So like I was talking about earlier, moving beyond transactions. And then ultimately, I think that will have a big impact on how that consumer interaction is with the bank compared to what it was currently, or even what it was a couple of years ago. And so for us, again, big focus is going to be on empowering our members to do the right thing for them. What sort of education, what sort of additional capabilities do we need to provide so that they can feel informed, empowered to do those things, whether it's triggered online, whether it's full end-to-end online, and then passing over those experiences into a fully human-powered conversation interaction as needed. And as I think about it a little bit broader, there's also the very exciting possibility of fusing many of those experiences together. So creating those ecosystems. So it's not so disjointed when you go to different providers, the financial institutions, the different types of businesses, and actually creating a little bit of an ecosystem around specific things, whether it's on the lending side, around the home journey, on the investment side. So really leveraging the technology that's becoming available to us to connect those experiences for the end consumer and create more of an integrated environment for them.
Okay, thank you, Yana. We've got 3 minutes left. I've got just one question. I want to ask Richard this. If in the past, if someone wanted to set up and run a bank, you needed a whole bunch of things. You needed, well, a banking license to start with, cash, probably lots of it, real estate, so buildings, branches, big, heavy, ugly computer systems, offices, loads of people, so bank staff, sales, marketing, technical staff, loads of technical staff. So, but now we also see the likes of Revolut and some of the real sort of the new entrants into the market that kick off very lightly and they bypass many of these requirements. So the question is, if you were starting a new bank today, which of those things wouldn't you have to do? Or to put it another way, how much simpler can starting a new bank get in the next 5 years?
Yeah, so I've worked with a lot of challenger banks and then the neobanks, and I'll call the neobanks, closer to the ones that really bought into the cloud approach. But in particular, I worked from, sort of a coffee and a serviette with Nick Ogden, who founded WorldPay when he founded ClearBank. And so that journey of seeing it from a sort of a shared office with a bunch of people really working just on the banking license, and the regulation, that was where they poured a lot of their effort. They had architects working out what was the architecture going to be, but their primary decision was to work with the cloud, work with somebody looking after the compute, the network, and the storage, but actually to focus on the security that banking platform as a service provider brought them, and then integrate into certain other software as a service providers who might help them with regulation and control. But they wrote their own core banking piece. Interestingly, that I think is rare. I think you would buy that now from people like yourself who would say, we can deliver on top of that vanilla platform from a Microsoft or an Amazon or a Google, a banking platform as a service. We'll focus on the regulation, we'll focus on the customer experience, and we'll focus on the API so that we can actually do this open banking piece of plug and play. So where does that get you to? I think, I'm working with Nick again now on his next venture, which is rtgsglobal.com, which is he's rolling out a global cross-border payment system. You see the same pattern emerging, but as he said only today, I'm now able to go global because this compute platform, these software as a service players are all global, and I'm able to plug into the bank systems via an API. So I can focus now on just this ridiculous scale of that new proposition, whichever it may be, the focus niche that you're going after, and the business value rather than the infrastructure.
Great, thank you. I'm conscious we're just on time. We're just out of time. So I'd like to just take this opportunity to thank my fellow panelists, so Yana, Richard, and Vitor. I'd like to thank everyone that's joined the session today. I hope you have a great rest of the day and a good day tomorrow as well. So thank you very much indeed. Goodbye.
Thank you for the opportunity.
Thanks all. Bye.
Bye.
Bye.